I'm giving a 60% probability this is a relatively normal cycle, in which case it would get to 150,000, let's say. I'm giving a 20% chance that it's actually a front-loaded cycle because of the ETF and other stuff, that maybe it gets to that 150 faster and then fades, which will be kind of pain for a lot of people who expect it to go into 2025, right? And then the other 20% chance, I think, is that this ends up being a bubble cycle. And so it looks more like 2011, 12, 13 than it does the previous one. And in which case, if you remember that cycle, it had a interim top correction. Everyone thought it was over, and then it just exploded again. I think there's a decent chance of that.
Real Vision founder and CEO Raoul Pal has three possible outcomes for Bitcoin through the 2024 and 2025 cycle, each exciting and reasonably bullish for the leading crypto asset. Pal's first scenario, where this cycle is like any other crypto bull market, sees the crypto asset rising by around 240% to a new all-time high of $150,000 per coin. For Pal, a renowned macro analyst and digital asset enthusiast, this is the most likely scenario, and he gives it a 60% probability of playing out. This scenario does not take into account the influx of thousands of institutional investors, which, thanks to the approval of several spot Bitcoin ETFs, can now directly invest in the leading crypto asset. Bitcoin's price movements since the launch of the ETFs can only be described as disappointing. Instead of the significant and rapid price increases we all expected, Bitcoin's price has been stagnant since the first drop from $49,000 last Thursday. Recent price action notwithstanding, Pal is still very bullish on Bitcoin, and even in the least bullish scenario, sees the crypto asset hitting a new all-time high of $150,000. Pal's second scenario is just as bullish for Bitcoin, not over the top, but with less steam. His third scenario is the most bullish and important. Though he gives only a 20% probability of this playing out, Pal says Bitcoin could go as high as $500,000 per coin during this cycle if all the macro factors and crypto fundamentals align perfectly. We will now bring you clips from Raoul Pal's latest interview with Anthony Pompliano, as the renowned macro guru discusses his outlook on Bitcoin's price action going into the halving and beyond. Please take a little time to like and share this video, subscribe to the channel, and turn on the notifications bell for more videos. You can also join the conversation by dropping your comments in the comments section below. Everything helps with the YouTube algorithm and contributes to the channel's growth. Thanks and enjoy.
Always the most ridiculous thing happens in crypto. I mean, even the run-up was the best, right? That total goat rodeo of that tweet that was hacked. It's brilliant, and it going down is befitting. Basically, it's the overhang from GBTC. So there's a lot of activity, a lot of repositioning. Net flows have been offset really by GBTC as people are unwinding the arbitrage and stuff like that. So I don't think you need to read much into it. It probably has to digest. Don't forget, you brought forward a lot of demand. Net, what will we brought forward? $2-3 billion of demand. Okay, so that takes time for the market to digest. And then you've got to think through who the RIAs are, who these people are. And if you put them in your head, these are not New York dealing rooms who are getting on the phone and saying, buy this now. They're people who are wearing slacks, who read Barron's on the weekend, read about the ETF, aren't sure, go on the golf course, see their best client. He asks them a question. The whole process is slow. They've got to go and have steak dinners and all of that stuff. So the whole process of bringing people in is going to take a while longer, but it's there now. I just think of the ETF as a trade deal between fiat world and crypto land. And so now capital can flow in much easier than it used to. I kind of think of this as a mental model as like China entering the WTO when everybody could invest in China. That's what this is. Now, these aren't permanent residents in crypto land. This is more hot money flows, tourism flows, hot money flows, direct investment, foreign direct investment, that's VC flows. And then we've got a bunch of residents there, people who have wallets and all of that. So I do think of it as an economy, and this just allows trade. So if you think about the biggest buyers of this stuff is actually the millennial cohort. What the millennials do really well is they invest in their 401ks every month, and they can put this in their 401ks. So that's sticky. That's why ARK didn't get all the redemptions when it went down 75%. It's because it's millennials who own it and they put it in their 401k and they're in it for the long ride. So I think it's the boomer crowd who'll be more concerned about the volatility, I think. But that's I think that's a very good thing. There's going to be a lot of people putting it as a long-term asset, buy and hold, and that should give it the stability that you need, that you don't just get massive washouts from people panicking the moment it goes down. And I think most of the ETF providers have made it pretty clear that it's a volatile asset and it's a buy and hold asset. I think as assets mature, they become less volatile. So I think we need to expect that. And particularly from passive flows of 401k investors putting it in every 2 weeks, every month, that'll keep a bid that didn't exist before. So I think, yes, we'll probably see lower volatility, but we'll also be feeding capital into crypto land. And crypto land's not just the state of Bitcoin, it's a whole bunch of other places that are going to see capital flows. So the Wild West will still exist, but the big daddy becomes less volatile, yes, it's a shame because we can't make as much money out of each cycle. But if our underlying philosophy is we want the adoption of this technology to be broad and deep, it has to go that way. So it's kind of good from that philosophical angle of trying to change the world, bad from the ridiculousness of the cycles and how profitable they can be if you get them right.
Meanwhile, Bloomberg ETF analysts James Seyffert and Eric Balchunas have given exciting updates on what they describe as the Bitcoin ETF Coin-Tucky Derby. On Tuesday, James tweeted, "Update on the Bitcoin ETF Coin-Tucky Derby. The ETFs have traded almost $10 billion in total over 3 days." The chart accompanying the post shows Grayscale and BlackRock iShares Bitcoin Trust, leading the pack with $5.12 and $1.99 billion in total volume, respectively. Fidelity, ARK21 shares, and Bitwise came in third, fourth, and fifth with $1.46 billion, $567 million, and $258 million, respectively. The total volume for the 10 ETFs was $9.683 billion and $4.55 billion excluding GBTC. Eric, James's colleague and senior ETF analyst at Bloomberg, quoted the tweet about an hour later to express how much of a huge deal this is for Bitcoin. His post reads, "Let me put into context how insane $10 billion in volume is in the first 3 days. There were 500 ETFs launched in 2023. Today, they did a combined $450 million in volume. The best one did $45 million, and many have had months to get going. BlackRock's iShares alone is seeing more activity than the entire 2023 freshman class." In a follow-up post, he added, "Note, half of those 500 new freshman class ETFs did less than $1 million in volume today. It is hard to get volume, harder than flows even, and definitely harder than assets, because volume has to form naturally in the marketplace. It can't really be faked, and it gives an ETF staying power." The question now is, if there is so much trading volume, why is Bitcoin's price down? Analysts have argued that it's all caused by outflows from Grayscale's GBTC trust, which should soon begin to lessen over the next few days. More on that after Pal gives his outlook on Bitcoin's price for the rest of the bull market.
I'm giving a 60% probability this is a relatively normal cycle, in which case it would get to 150,000, let's say. I'm giving a 20% chance that it's actually a front-loaded cycle because of the ETF and other stuff, that maybe it gets to that 150 faster and then fades, which will be kind of pain for a lot of people who expect it to go into 2025, right? And then the other 20% chance, I think, is that this ends up being a bubble cycle. And so it looks more like 2011, 12, 13 than it does the previous one. And in which case, if you remember that cycle, it had a interim top correction. Everyone thought it was over, and then it just exploded again. I think there's a decent chance of that, but we need to see the contextualization of how the ETF flows impact, what's happening with monetary policy, what's going on in the economy, how the election's going to play into this. So that's how I'm thinking of it. That upside crazy bubble target, using that kind of everything code structure that I've talked about in the past, we get price targets of 500,000 plus. So even if I discount me for being a moron by 50%, you still get 250 grand. So that's kind of the spread to me, 150, 250. But obviously, who the hell knows? And as you know, the worst thing for any of us is everybody wants price targets, and then a year and a half's time they hate you for it because you weren't exactly right. Think about the crowd that got financialized in 2020. Again, mainly the millennial crowd, right? There's 110 million Coinbase accounts. And when I checked 6 months ago, only 9 million were active. So speaking to the guys at Coinbase, they're like, yeah, in normal activity, it'll get to 35, 40 million and the top will grow as well. So there's a lot of money still to come in of people who participated last time around, have that interest, still have PTSD, will come back in. So maybe that offsets it. I don't know. I also have a feeling the applications layer of blockchain is going to bring in a lot more use case. So I'm thinking of this cycle as maybe the everything, everywhere, all at once cycle, when people have different unlocks for NFTs or inscriptions or different unlocks for smart contracts and some of the other things, and they can use it for everything from whether it's ticketing to real world assets. So it just depends how far that applications layer goes. If the applications layer doesn't make much progress this cycle, then you're dead right. We'll see rebalancing. Don't forget, they're also going to be issuing options on the ETF, and that changes the structure of markets as well. What you've done, and it was always going to happen, is Bitcoin's now become financialized when it wasn't really. It was still had purity to it. Now, it doesn't mean it's impure because of this, but you've allowed a financialization layer. And what that's going to mean is that they are going to offer leveraged products on it. Now, options are defined risk products, but what you end up with is in a very high volatility product, we get a lot of volatility sellers, and it dampens the market because they're always hedging. And that hedging structure can really change the nature of markets. Sometimes it creates acceleration points because everybody's short and suddenly the price goes through and everyone has to buy everything back. Other times, just by the ongoing selling of yield, selling of premium for yield, it slows down the whole market itself.
On Tuesday, blockchain analytics platform Arkham Intelligence released data showing a transfer of 8,730 Bitcoin worth over $376 million from the Grayscale Bitcoin Trust to Coinbase Prime deposit addresses. The transfers imply that the fund may have been selling some of its Bitcoin as its share price declined. Before it started trading as a spot Bitcoin ETF on January 11th, investors in the GBTC fund could not redeem their shares for Bitcoin or a cash equivalent. Since the conversion, authorized participants have been allowed to buy up shares from investors and redeem them for the cash equivalent of the Bitcoin these shares represent. When that happens, GBTC must sell off Bitcoin to pay the recipients. Arkham previously reported that GBTC transferred $41 million to a Coinbase Prime wallet on January 12th. Analysts believe that outflow may have caused Bitcoin's sharp decline that day. On the same day, Eric Balchunas also reported that GBTC experienced a total of 95.1 million outflows on January 11th and $484.1 million on January 12th. Here is another update on the GBTC gouge from Balchunas. Latest, day 3 in books, the total rolling net flows is plus 782 million, as the newborn 9 have more than offset the GBTC gouge, which is now up to minus $1.2 billion after $500 million yesterday. The 9's $2 billion in AUM and $4.5 billion in volume is fabulous for the first 3 days of trading. In a follow-up tweet, Eric added, "There's no denying the GBTC gouge is big and ugly, definitely going to need stitches. The bottom chart is going to be red for a while, but the good news is that the percent discount is shrinking. The closer the two lines at the top get to each other, the less pressure inside the ETF of people wanting to get out." With this analysis, we can expect a few more rocky days as the GBTC outflows trickle to a stop and investors find better pricing options among the other 9 ETFs. But after that, Bitcoin's price is expected to really improve, and we could be back on our way to $50,000 and beyond. Please don't forget to drop your comments and observations below. They really help with the YouTube algorithm. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more important updates and predictions. Thanks for watching.